welcome back to the Broker Power Up podcast, the AIME podcast for strategies, stories, and insights to help you close more loans. I'm Tommy Golightly, joined by Jonathon and Haddad. How are you?
Yes, sir. We are fused, man.
It's
Fused
coming.
around the corner.
It's all I think about. It's from when I wake up to when I go to bed to while I'm sleeping. It's living fuse. Very excited.
Well, I'm sorry. Just so you guys know, he does have a life. I don't force him to do this.
No.
He does this on his own accord.
Self-imposed, for sure. Just want to make it the best event possible for our members. But we do have a lot going on today for the podcast. We have the Broker Buzz, where we dive into the top posts of the week from the Brokers Are Best Facebook group and discuss what's trending, what's working, and what you need to know. Then we'll dive into the sales pitch training, where John helps us become better salespeople. Then always, we will wrap things up with story time with John. But first, how we start every podcast, a fortune cookie. And just a little tidbit, if you are coming to Fuse, you can come see me in the exhibit hall and record a short little podcast with me.
Oh, you're giving away the heat right now.
Oh, I am. We gotta tease things out, right?
Yep.
We gotta get people coming to Fuse. And why I say that is because I'm saving all of our fortune cookies, and you can put one of the fortunes at random.
Oh, that's your.
And you can do it in a Broker Power Up themed story, and I can get it to you, and it'll be really cool. But today's fortune is a lifetime of harmonious relationships is yours to nurture. I like that a lot. A lifetime of harmonious relationships is yours to nurture. It's not yours to have. You have to nurture it. And it's a lifetime of harmonious relationships. So,
God, that's so deep.
It's very deep.
What are your thoughts on it?
It is the constant work, not always struggle, the constant work of intertwining all the relationships in your life that make you who you are and the people around you work together harmoniously.
Dude, it's I
but
agree
how
with you.
And how that works and how that communication goes, you have within your circles, you have a lot of control, whether you realize it or not. And it's just sending those messages and making your voice heard and making sure everyone is working together.
That is so spot on, Tommy. And there isn't a lot to add to it. The only thing that my head goes down the path of is, because you have to because they're not given to you. You have to nurture them. You have to work on them. And so it's also the opposite end of that. I always try to look at both sides. It's going back in life and thinking about the relationships that you shouldn't have nurtured and you should have ran away from.
Absolutely. That's definitely another way that this can be spun.
Well, it's both. And then the other part of it is just being it's one of the things I work on every year because I'm not good at it. And I'm trying to be better and better and better at it and just being a better friend, a better person. Just we all are, right? Every single day. For me, a lot of my life has been short-lived relationships just because it's like most people that I used to work with, what have you done for me lately? So it's like, that's what I thought. Okay, if I do something for you now, you're happy. And so that's just not how it works. It is about building them. And I will say the difference with me now is I'm very selective. I don't want a lot of friends. I don't have a lot of friends, like acquaintances. I'm cool with people. I'm friendly. I do love people and I talk to a lot of people, especially being in the role that I'm in now. But when it comes to just the darkness, the deepest parts of who you are as a human, I protect those relationships so much and I nurture them like you wouldn't believe. So I love that. That one is such a good one today.
Absolutely. That resonates on many levels. And it is one of those things where you kind of have to reassess those long-term relationships and are they a net positive for you? Or are you being brought down or are you being brought up? Do you need to match? Do you need to drop? Do you need to just assess, essentially?
100%. That was a good one today.
Yeah, absolutely. Let's move into the Broker Buzz with our first question of the week. Hey guys, needing some input. I might be looking for a needle in a haystack, but I figured I'd ask. I have a borrower that's a nurse. She's only been a 1099 nurse for a year. I have somewhere that will allow her full income. We are going a non QM route and she has to put down 10%. Now she's asking for any DPAs or grants that I know of for nurses to help with closing costs.
So this is a good one. To answer your question, so one, when you say she's a nurse, I would ask how long was she W-2 prior? If she was W-2 prior for many years and is in the same line of work, there are potential exceptions. It doesn't happen often. There's a lot you have to prove where conventional loan will actually allow you to use 1 year of tax returns.
Okay.
And now it is an exception basis. And that's why I was saying, how long has she been a nurse for? Is this new? And then there are rules, like you need a full calendar year. So what I mean by that is, example, if the client's tax returns are from, April of 2024 to the end of 24, that's not a full calendar year. They won't accept it. So basically it's like, does she have a real full year under her belt when she files tax returns? It's from start of 24 till the end of 24. Then there's exception opportunity. If not, then you're spot on. The only route you're going to be looking at is non-QM. And most non-QM isn't going to allow DPA. So it is a real shot in the dark. I would also, you might not like this answer. There are local credit unions in your area that'll do loans like this for doctors, nurses, and basically medical responders, where they're not as concerned. They'll allow the 1099 income and they'll allow, in some instances, 0% down. So if you can't find it and you really are looking out for the client, I would highly encourage you look at a credit union or have your client look. As much as you're like, well, I'm going to lose the opportunity. You're right. But your client's looking for something that just isn't really available on the broker space. I would try the 1 year tax returns if that's plausible for you. But if it's not plausible and the client really wants this home and there's nothing else you can do, I would highly recommend they look at a bank or a credit union that can offer some sort of program for nurses, doctors, first responders, things of that nature.
Absolutely. Cool. Well, our second question of the week. Does anyone know if a condo HOA can have a one-time payment special assessment for the annual budget reserves amount instead of charging it to the monthly HOA dues? Or does that not align with condo guidelines for Fannie and Freddie?
So here's what the person is asking for those that don't know what is the context here. So a special assessment, when you have a condo, you have your HOA dues, so homeowners association dues. And what that does is it'll cover amenities or certain things in the area. It'll cover snow removal. It covers a whole barrage of things. Now, on occasion, something happens to the property that isn't covered under the HOA. And what they'll do is a special assessment. An example of this is, let's just say something happens, God forbid, to the roof and the roof needs to be replaced. Well, if the roof needs to be replaced, what the condo will do is they'll charge every unit accordingly and split the cost. So really, really simple stuff, right? Hey, it's a special assessment. We need to pay for the roof. It's going to be on here for 2 years. Sometimes special assessments happen because taxes go up for one reason or another. They'll apply a special assessment. It is broken down by each homeowner in each unit of the complex. And there's some math that's involved, but none of my business. The HOA will handle that math. But each unit will then be charged an additional special assessment on top of their HOA dues. So if the client is $100 a month for HOAs normally, but then the special assessment's another $100, I now have to hit that consumer for $200 when it comes to their monthly output, as opposed to just the $100 prior to the special assessment. So what this person is asking is there a way to just pay a one-time fee across the board? The answer is yes. But however, because you knew that was coming, the answer is yes, but it has everything to do with the complex. What I'm assuming you're asking is, can my consumer just pay their portion up front? Not necessarily. If HOA doesn't want to report it that way, or they want to just keep it in order and in line, they're not going to allow you to do it, to prepay that up front. However, you can ask, you can go down that path. You can have the consumer ask the HOA. It's worth asking the question, have I seen it done? The answer is yes, but it was a collective. And the one that I did, it was like a 6-unit condominium complex. It wasn't, we didn't have to talk to 200 people. It was like, yo, everybody, can you spend an extra $1,000 to pay for this? Everybody agreed, and we took care of it. The HOA did, but we asked just to get this deal done. So that's what I would recommend is you ask the question. The answer is yes. It doesn't go against guidelines, but you will deal with some situations talking to the HOA.
Absolutely. Good answer. And our final question for the week. I got a situation. A client is supposed to close on her new purchase in a few days, and the sale of her current home fell through. There was no contingency covering her in this event. Are there any companies that will still do a cash buy and give her time to sell the home? I knew of Ribbon, but they are no longer in business.
So yes, there's a company out there called, I believe it's Homelight, that you can look into and reach out to, and you can leverage Homelight. There's a fee that they charge. The other thing you can do is with AIME, we have a lender, Windsor. Windsor does bridge loans. So you could set up a bridge loan. It's, I believe, 85 CLTV. If you're not signed up with Windsor, I would. But a bridge loan option sounds really good. Fees are incredibly minimal. It is a great product. We use it all the time here at my company. But those are going to be your two options. Homelight, I believe they charge 2.3% once the home sells. I believe so. But double check. But they'll basically give you the money to have a non-contingent offer. The bridge would still be contingent. You are going to have to include everything in the debt to income ratio. So I don't know if that's going to kill your deal on your side of it, but Homelight is one of the companies. And then Windsor Bridge Loan. Let me double check if Homelight is still Homelight. Yep. Homelight's still around.
Okay.
So that's the company. That's what I would look at. The Loan Store was using them for a while back in the day. I don't know if they are anymore. They might still, but you can basically attach it to any lender as long as they accept it, the usage of it. You'll have to explain it so you don't include it in the client's debt to income ratio, but Homelight is the company.
Got it. Absolutely. Well, if you want your questions answered on the podcast, be sure when you post in the Brokers Are Best Facebook group to use hashtag BrokerPowerUp. And if you are not in the Brokers Are Best Facebook group, consider becoming an AIME member and joining and getting all the resources that come with it, including a ticket to Fuse. So take a look at the ad, take a listen to the ad, and scan the QR code, and we'll see you on the other side for some sales pitch training.
Are you a wholesale mortgage professional? Well, then the very first thing you need is a community to help you and your business grow. With AIME membership, your community is right here. Joining our community means never navigating the market alone or operating without a safety net ever again. We are 16,000 members strong of united wholesale professionals. From rookies to top-ranking originators, all dedicated to supporting each other's success so we can grow together. Beyond entry to the best community in the mortgage industry, AIME membership gives you the resources, tools, guidance, discounts, services, and support that help you and your wholesale business grow, thrive, and most importantly, close more loans. AIME membership connects you with leading wholesale lenders and vendors, offering you exclusive access, services, and discounts that save you more money while helping you make more money. Never get stuck on a loan again with our lender escalation program. Grow your network and skills with the wholesale industry's best conferences and networking events. Get the strategies and skills of top originators and industry innovators with AIME's cutting-edge wholesale mortgage education, resources, and content. AIME offers all of this and more, starting at a low price of $19.99 a month. You heard it here first, couple cups of Starbucks coffee. For you to learn more and get started, all you have to do is visit aimegroup.com, AIME group.com/membership. Your community is waiting.
And I'm waiting to become a better salesperson. John, what do we got?
Dude, we need a blooper reel of you saying, and I'm waiting.
And I'm waiting.
It
happens every
31.
week. I keep trying to think of a better one. I'm just like,
no, keep it. Like I smiled because I was waiting for you to say it. Like that's what I was waiting for. So please don't get rid of it.
Okay,
keep it, and we got to make a blooper reel out of it. And I'm waiting, and I'm waiting, and I'm waiting.
I'm waiting.
So today's sales tip, y'all, is a very simple one. I'm going to make this one really easy today. Facts always stay facts. The only difference is the way you frame the facts. So I'm going to talk to you about framing today and the importance of framing. Now, first and foremost, I need you to understand me as a human being, philosophically, when it comes to finances and making decisions and talking to clients. You can call me delusional. You can call me whatever you want. I don't care. My life has brought me to these paths, as I'm sure yours brought you to yours. And so for me, understanding home ownership was a much bigger deal than I had thought it was as a kid. It was not something we talked about. We did have a house, thank God. My dad had no idea how he even got it. And real talk, looking at his tax returns, Dad, I love you, but I have no idea either. Many, many, many years ago. But then there's a lot of things that happen with the home and how to deal with it. And a lot of people don't have those conversations. I am very in tune with those. It's affected me personally over the years. I tell you that because when I'm on the phone with a consumer, I truly believe I am the best fit for that client. I really do. And so for me, the framing is such an important piece of having clients see what I see, the value of home ownership, the value of refinancing. A lot of people I talk to, loan officers, they say things like, oh, this isn't worth it, or I'm not sure it makes sense for the client. And you're assuming that the client is on top of their finances. That's just not the reality. And you know that. You've pulled a lot of credit. I've pulled more credit than I could even tell you. A majority of Americans are hurting and they're struggling. And so for me, part of the framing is just a really big picture. It's about explaining to the client. So there's 3 different ways you can frame. Number 1, there's positive frames. Number 2, there's time frames. And then number 3, there's identity frames. So I want to walk you through the differences of these, and I want you to just envision how the conversation takes a different toll. All right. So Tommy, we're going to start with positive frames here.
I like that.
So positive frame is something like this. So let's just say that the client has a refinance. So Tommy, we're looking to refinance you.
Okay.
And let's just say you have a 6.75 interest rate. And I have a loan for you that's a 6.25 interest rate, but it makes sense. You know, it saves you, call it $125 a month. Loan makes sense. You're not really saving much money on a monthly basis. You're skipping a mortgage payment, whatever the case is. So what a lot of people do is they start the conversation with like this: Tommy, your rate is going from 6.75 to 6.25. What do you think? And then they pause. As opposed to, hey, Tommy, you know, what if I can show you a way to save $45,000 over the life of the current loan that you're in while still saving you $125 monthly? Would you be interested in this conversation?
Yeah, that sounds way better because you're the first one, you're expecting them to understand and do all that math, and they're not going to be able to.
And this is
Because
positive.
my head was immediately going, well, what does that actually mean? I know the general idea as a home
That's
buyer,
my point.
but I don't know exactly.
This is why I love doing it with you, because that's exactly it, right? I know you don't do this every day. So even with you,
Yeah.
I can see your face. And I'm like, okay, this is how clients are too on the other
Yeah.
end. Because you're not doing mortgages every day. You're like, why would I go 0.5% lower? Why does it make sense?
How
When
much
I
do I have to
start
put
with
into the refinance?
exactly. So look at that, y'all. Tommy doesn't do this every day. He owns a home. He has all of this. So just imagine him right now. It's the first time he's heard me say it that way. Even him going, okay, 6.75 to 6.25. All right, I guess that's cool.
I know that's positive. I know that's an improvement, but what do I have to do to do that? And
yes. And if you start with that, the 6.75 to 6.25, it then seems like you're backtracking. Well, wait, there's more though, Tommy. You don't want to say 45,000. That's not what you said to me.
but wait, there's more.
But wait, there's more. Sham wow. So that's positive frames. Let me give you another example of positive framing. Hey, I know you can afford it, but this house is $50,000 more expensive than the last one. Versus, hey, let's take a look at this one. Debt to income wise, you're still in a great range, but with this house, you're gaining an extra 2 bedrooms and a backyard.
Yeah.
Think about that for a second.
Yeah.
And
be
now
able to grow a family better, be able to.
what I said with me and my background. Look, I'm not presenting a loan if debt to income's through the roof. All right, let's just be crystal clear with you. What I'm getting at is it's the way you frame the conversation. Now, here's another one. You ready? Should I lock my rate? Well, rates could go up versus, look, locking in now protects you from the potential of your payments going up. Now, let me ask you, are you a gambling man?
No.
You are, then fine, keep your rate floating. But if you're not, I would highly consider you look into locking your rate. There's the why. It's the frame. Your rate could go up. And that's positive framing. Number 2 is time frames. Are you ready?
Mm-hmm.
Time frames, Tommy? This one's my favorite. Yeah, we'll close in about 3 weeks. Tommy, in exactly 20 days, we'll be at the closing table. You'll be signing off on your documents, ready to take your keys, as opposed to saying in 3 weeks.
Yeah, specific is important because sometimes those actual days matter, especially like in this season right now. It may be a little late for it, but school's starting, right? Like you want to be in the home on that day.
Yes, sir. And this is the little pieces. Now let's take it again. Let's go even further with this, okay? Think about this for a second here. People that don't get specific about interest that you save. Hey, you're saving $10,000 in interest. Hey, I want you to write this down. You're saving $10,136.42 in interest. That's important. Most people don't want to look at their finances. So when you speak this way to them, it's forcing them to be dialed into it. And the last one, identity frames. This is a really big deal. So as opposed to saying something like, you know what? Yeah, you know, some clients are doing stuff like this. Hey, a lot of clients that are as financially savvy as you are taking advantage of this specific product, and here's why. Identity. I'm tying you to an identity.
Yep, puts you on a pedestal.
Yes, financially savvy clients. This is an identity frame. So there's 3 ways to frame you, and I don't want to make this confusing because there's so many of them. But positive frames is number 1, time frames is number 2, and identity frames is number 3. You can do this with everything. You keep the facts, but your framing changes. And this is because I am delusional, but I do believe I am the best fit for somebody to do a mortgage. And I gave you some of the reasons: my background, my upbringing, what I dealt with growing up, being first generation Middle Eastern American, dealing with all these different little things. And a lot of you have a different story too. But that's why I believe I'm the best fit. And so being able to have those conversations, I need to give myself the best opportunity to showcase what I'm offering you as a consumer. And this is what I found to be the most effective.
So, question, when say I'm a mortgage broker and I'm going to my client, which frame how do I know which frame to pick?
Let's do an example. Okay. So where do you want it? You want me to be an agent? You want me to be a loan officer? What do you want me to be?
You're the loan officer. I'm the whatever you need me.
Where do you want to start? You're a client. So where do you want to start?
How would you decide which frame to speak to me?
Yep. Okay. So number 1, I'm a huge person when it comes to reverse bandwagons and bandwagoning. And let me explain. So I would always start the call this way, and I'd set it up this way. If it's a potential refinance opportunity, I would say, Tommy, are you looking to save money on a monthly basis, or do you look at your bank account, have extra cash left over, and want to pay the home off down faster?
Pay the home off faster.
Okay, I find that actually very fascinating because most of the people I talk to are actually looking to save money monthly. What have you done to help propel yourself forward and pay the house off even sooner prior to us even looking into this refinance?
I am a very good saver.
You see what I'm doing? Now, what did I do? I'm giving you the opportunity to showcase. See how I, it's like that, snap of a finger. And that's just, again, I've been doing it 13 years. So it does come naturally. But to that point, a client just told me 15 years. I'm telling you, oh my God, everybody else is doing 30, which by the way, you all know that's true. So like I said, you keep the facts the same. My
Yep.
framing's different. I
Yep.
just made you feel really good.
Yep.
Actually, 90% of the people I talk to, Tommy, say 30. I'm actually, whoa, I'm impressed that you're looking at a 15. What have you done to help pay the house off faster? And have you always been this way?
Yeah.
Yo, it's done. It's lights out. Everyone else is doing what? Oh, okay, 15 years. So rates right now at a 15-year at a 4.75, and your payment's going to go up $400 a month, and you're going to save interest on this, and what are we doing? What are we doing? Excuse my passion, Tommy.
No, you're fine. You're fine. I love it. I love it when you get fired up. I try and ask questions to get you into those moods. But if you want more sales training live and in person, come visit us in Nashville at Fuse in October and check out the ad. If you are a member, claim your ticket. If you are not, consider becoming one and joining us, because there are some amazing speakers already up on the website and more to come. So scan the QR code and we'll be back with story time.
Fuse is just around the corner, believe it or not, another year down. And we are excited for the largest event of the entire wholesale mortgage industry. Fuse National Conference 2025 is taking its show on the road. Now emanating from Nashville, Tennessee, from October 23rd through the 25th. This event is all about sales, sales, sales. Don't miss the chance to join us in Music City for 3 days full of the most cutting-edge content we've ever produced, featuring the industry's top minds, leaders, and innovators. Access the newest tools and resources from wholesale leading lenders and vendors. Take part in our acclaimed workshop summits for free. Catch wholesale's rising stars in their very own breakout sessions. And of course, take part in the best and, quite frankly, the most fun networking opportunities you'll find in the wholesale channel. Join us to grow your network, your skill set, and your business at what will no doubt be the greatest Fuse conference yet. Go to fuse.aimgroup.com to sign up and receive updates when tickets go on sale. Secure your hotel room and get your Fuse tickets for free. That's a $600 value for the prices as low as $199 when you sign up for an AIME annual membership. Don't miss your chance to be there when wholesale history is made at Fuse 2025. I can't wait to see you there.
All right, John, the floor is yours for story time.
So I'm going to take a different approach to this week's story time and just talk about sales with this group briefly. And talk about not prejudging and the art of sales and the art of communication. And it's a story about one of our personal clients at the company. So we obviously lead flow, all this, whatever, doesn't matter. We have a client that calls in, and this client called in, and this client was denied by multiple people over and over and over again. Banks, credit union, retail lenders, everybody that you can possibly think of. So we get this client on the phone and we start going through it with this client. We pulled the client's credit score and definitely was not a good score. The client needed to do something. They were hurting so badly. Now, this is quite some time back. So the client's hurting, and we are calling this client every single day, trying to figure out something, trying to do something, trying to just get their life in a better spot. Now, this client was a elderly client, and they were just dealing with life like so many of us deal with. And it truly felt like this individual was at the brink of not knowing what to do next. I've been denied every time. There's nothing you can do. I'm going to lose the house. This is going to happen. X is going to happen. Now, this client, fortunately for us, was making their house payments on time, but everything else was just falling at the wayside. And everybody told this individual there's nothing that can be done. And so it makes me think a lot, how often do we say that to a consumer because the file just is really hard? Or maybe we've been burned in the past and don't want to deal with it yet again. Putting ourselves in somebody else's shoes is very difficult. It can hurt sometimes trying to think about their pain and what they're going through, especially when you're dealing with yours. And let's just call it what it is. You want some easy opportunities that get put in front of you. But every once in a while, you have somebody that go above and beyond. And so I want you to hear what we did for this client. No one else told her this idea. So we walked through the client, actually connected her with an agent. We said, have you thought about selling your place? I can never sell my place. I can't get anything new. Well, the place that she owned happened to be worth a tremendous amount of money. Tremendous amount. She's like, if I sell this, what am I going to do? Where am I going to go? So we said, look, just talk to an agent. Just see if can you get more than what you think the house is worth? Can it help you pay bills? Can it set you up to just enjoy the rest of your life? This was the real conversation. And this is something she said to us. The last of my days, I just want to enjoy it. I just want to enjoy it. I just want to enjoy it. That's hard to hear. That's hard to hear. If you have grandparents out there still, I know a lot of people don't, but if you do, just think about that for a second. You know how bad that hurts. I'm sure some of us on this call have grandparents that suffered and struggled. I got one left. She is my rock. She's an amazing human being. Her life was brutal. So we're making it as easy as we can for her because we love her. But she had nobody. So we had the agent talk. We made a connection. Agent talked to her. Agent says they can get at least $200,000 more than what she thought for the home. She was thrown back by it. So then she said, yeah, but what do I do? Where am I going to live? I don't want to live in an apartment. I want to own something. We set up a reverse mortgage conversation. We set it up. Now, we've done a couple reverse mortgages here, but I don't specialize in it. So we handed it off to somebody I trust, I know will take care of the opportunity. And the client, Tommy, I actually might send this to you as long as I can. As long as I can send this. So just mark this, make sure I double check with my team, the text message we got. Email address, not text. She closed on everything. She did the purchase, reverse mortgage. She closed on her house. The text message we got brought tears to my eyes. It was unbelievable to read it. Now, look, yes, the emotion will run wild here later and over the next couple weeks, and that's what happens. And then you're on to the next thing. But I share that story with you because those impacts are the ones that I look for. That's what keeps you going in this industry. People need your help, but you have to be willing to have conversations. You cannot prejudge, and you got to be willing on occasions to go above and beyond. That is my story for this week. I appreciate you all. Have a great day.
Love that. Yeah. I mean, that's a story that really drives home why brokers do what they do, and a reminder of this is people's homes. This is people's homes are people's lives. They have memories there. It's more than money. And I do have one grandma left and love her immensely. And
Me too, man.
yeah, it's a special relationship we have. And thankfully she is not in a situation like that. But
Exactly.
I'm just glad that there was a broker out there like you and like the person you handed it off to that was able to figure out a way to maintain that. And I think that's really special.
You're the man. Thank you, brother.
And thank you for tuning into this episode of the Broker Power Up podcast. If you found today's tips helpful, do us a favor. Hit the like button to let us know you enjoyed it, which helps even more people see this content. Subscribe to our YouTube channel. Ring the bell to get notified every time we drop new content. Share this video with a fellow broker who could use a power up. And remember to lead by example, to lift each other up, to grow together, and most importantly, close more loans. Until next time, keep powering up.